Hey, what is up guys, welcome back to ProTraderPath. I'm back with another video, and in today's video I will be giving you the very first lesson on the market maker model. This will be a series of 10 to 15 videos, and I will try to make the videos as small as possible, and at the same time I will try to make it as informative as possible. So there will be a lot of questions in between the lessons, but what I suggest is you take your notes and you write your questions in another page. By the end of the entire series or all the lessons, if all your questions are not covered or answered, or you cannot find the answers of those questions, then we can have the discussion, or we can have the question and answer session as well. So keep patience, keep practicing, and keep taking notes. Now on the very first lesson, I'm going to give you the introduction of a market maker model, and after the introduction it will be most likely drawing up until nearly the end of the total course or all the videos. And once I'm done with all the lessons, at the very end of the total lessons you will have your live market data or chart. And by the meantime, as I mentioned, like I have uploaded a execution video that can be helpful and save it for later. So if you have done that, you can have a look inside of that specific execution. You will find few of your answers over there as well. So yeah, without any further ado, let's start. In a live market condition, you will see market is always doing one of the following four things. It will either do consolidation, or it will do a expansion, or it will be doing a retracement, or it will be doing a reversal. So these four things, based on at which stage you are looking into the market, your narratives will give you a lot of information regarding the market and which side or which sort of entry you will be looking for. As this is the introductory video, I will go with the most basic thing. Market will always start with a consolidation. What does it mean? The market maker model you are looking at, consolidation is the starting of that market maker model. The expansion would look something like this. So in this case, we are looking into a higher expansion. The retracement will look something like this, and the reversal will look something like this. Now there are two types of reversal. Type 1, market will create a higher high. This is the most preferred method from ICT, which we also know as the 2022 mentorship, which is a high created prior to the previous high. A higher high is created, market has taken the buy side liquidity, and then a market structure shift below a recent swing low, and we anticipate a fair value gap or any PD array, premium discount array, to enter into a trade or to participate in a trade. The type 2 is a lower high. In this case, market will create a lower high than the previous high. It will give you a break of a structure or a market structure shift below an old low or a recent swing low, from where in the retracement leg you will look for a entry, and then the continuation of the next expansion phase towards the side you are anticipating. I hope the two types of reversal is clear. As I said at the beginning, everything starts with a consolidation. So the consolidation is the beginning of a market maker model. Once the consolidation is done, or once the consolidation starts, the next step or the next phase that we can expect from the market is an expansion. From an expansion, market can either go for a retracement or a reversal. Now from the expansion or from the retracement or reversal phase, from any of these two phases, market can again go for another expansion. So from the retracement, market can again go for an expansion. From the reversal, market can again go for an expansion. Now the expansion and reversal, don't mix it up, because think this way. If this is a reversal, it can continue lower. Don't expect that the expansion happened towards the upside, that means the next expansion can happen like this way. No. When from the expansion market went for a reversal, the next expansion you can expect towards the lower portion. From reversal, market can again go for an retracement as well, or from a retracement, which is, let's say this one, market can go for a reversal as well, like this. I hope the reversal and expansion part is clear to you. So what do I mean is, from the expansion, market can go for a reversal. From reversal, market can go for another expansion. The expansion, you are not expecting upwards straight away. You are expecting what sort of expansion now you are looking into? The lower expansion. So don't mix up the first expansion with the next phase of expansion. Okay, I hope that part is clear. Now, the main part that you have to understand is, from the consolidation, market will never do these two things. It will never give you a retracement, because from the consolidation it has nothing to retrace from. Same thing goes with the reversal. From the consolidation, market will never give you a reversal, as I said earlier, that it has nothing to reverse from. Whatever the big move you will see out of the consolidation area, you can mark that move as your expansion. Now from the expansion, where should you look into? That if it is retracing or if it is giving you a reversal. Okay, I hope that part is clear. However, market can easily consolidate from a retracement, or market can easily consolidate from a reversal. From the consolidation, market will again go for the new expansion, and the cycle continues like that way. These are the 4 cycles of the market, and I hope with this information alone you can improve the way you are looking into the chart and the way you are currently trading. So that's it for the lesson on. I will come back again with the next lesson. Until next time, take a very good care of yourself, your health and your loved one. Bye bye.